Hello, my name is David Johnson from QuotedData. I am here with James Henderson, co-portfolio manager of Law Debenture, an investment trust which has just recently won our award for Best Long-Term Income. James, if you wouldn't mind, could you give us a quick introduction to yourself and the strategy that you run?
I'm James Henderson. I run the portfolio along with Laura Fole of Law Debenture Investment Trust. Law Debenture is a unique animal in that it has two distinct businesses. 80% of the assets are conventional investment trust portfolio that I run, and 20% is a professional services business that has been growing very satisfactorily for a number of years. It provides 35% of the income. So that gives me and Laura a real advantage because we start the year knowing that we've got a pool of income there, so we can have a slightly lower yielding portfolio than other people. And that has given us a real opportunity to look at a wider range of stocks. We run a relatively long list. We're predominantly UK. We go overseas when we can't find it in the UK. And we're multi-cap. We have large, medium and small companies. And what we aim to do is to grow the capital with an income discipline. And that way you get sustainable long-term income growth as well as capital growth.
So what do you look for in a company when it enters into your portfolio? How would you define your investment philosophy?
We don't have one single approach to looking at a company. Different company sectors, we use different metrics. So in the property sector, we'd look at asset value, for instance, but not just asset value to market cap. What we're really looking for is growing asset value. The way we try and avoid value traps is by making sure the underlying asset, the underlying company is genuinely growing. So yes, we're value investors, yes, we're contrarian, but we're also always looking for growth. Growth has got to come through sometime because companies don't either decline or they get better. They don't stand still. We're always looking for companies that are improving. That improvement might be a year or two away, but it's there. It's going to happen, and that's the way we have always invested. This mixture of growth in time.
Congratulations again for winning the award for Best Long-Term Income. Why do you think that the public voted for Law Debenture to win this award?
Well, it has provided long-term growth of capital and income. This mixture of the two businesses, the portfolio and the business of professional services, are very complementary. They help one another. The strong balance sheet the company's got is useful for a trustee. You want a trustee to be there for you in good times and bad. But if you've got a big, strong balance sheet, we're a £1.1 billion market cap company. As a trustee, you've got some authority. At the same time, the income generated on that trustee side makes my job so much easier than it is usually in the income space, because we start the year with all that income. We can have a wider range of companies that we're studying. We have some zero yielding companies in the portfolio because we believe they're going to give capital growth. And when they give capital growth and we sell them, we will often be buying a stock with a dividend, and therefore the actual pool of dividends grows.
Over 2024, how do you feel the UK equity market has done?
Well, the way people talk and how depressed some investors seem, then you look at the numbers and you'd be surprised. It's low double digit capital growth from the market. Dividends have grown as well. So it's been a good year, but no one believes you.
It's interesting you should say that you're so positive. I know a lot of people talk about sort of how cheap or even depressed UK equity valuations have been over recent years. Do you have any sort of comment on that?
Yes, I mean, the cheapness is being illustrated by the takeover activity that we're seeing at the moment. Today, I see that Aviva have made an approach for Direct Line at a substantial premium to the existing share price. But during the year, there have been takeovers in many different sectors. That is because to the industrial buyer, they can't understand why valuations are so low in the quoted market. And that underpins some of the confidence. And I think next year, to 2025, we're going to see more and more takeovers unless the stock market moves up substantially.
In the context of your bullishness and this increased M&A activity, how has Law Debenture done over 2024 so far?
It's had a good year. It's up about 3 or 4% over the index. The portfolio has been a bit refreshed by buying some good value, medium and smaller companies. And the outlook feels very positive, because when I look at the portfolio and work and drill down into the valuation numbers, it's at a very low level. And I can see growth coming through from most of these companies. So these are exciting times to be a portfolio manager.
Given that outperformance, what were the major drivers of your returns? What were your best stock picks so far over 2024?
Well, the best stock pick was Rolls-Royce. It was the biggest contributor. It was a reasonably large holding at the start of the year, and it has gone up about 80% this year at the time of speaking. We are reducing it marginally now after the strong run, but it's a great company. It took years to develop the trend engine, and now they're getting the benefits of it. I'm very excited by the company. And what else has been good? Marks and Spencer's, for instance, has been a good recovery share for us. These shares are often not dividend payers, Rolls-Royce and Marks and Spencer's. They're coming onto the dividend list, but they weren't. And that's a privilege running Law Debenture, that we can have these zero yielding shares. Of the yielding shares that performed well during the year, the banks, NatWest and Barclays in particular, stand out. They've got a good starting yield at the start of the year, and the capital performance from them has been strong as they trade closer to their asset value. In the small company area, the standout, I suppose, was Reynolds Chain. Not a stock perhaps people know a lot about. It is a small company. It's not actually paying a dividend at the moment, but it has gone up considerably during the year because it's manufacturing successfully, selling chain overseas successfully, and it's a growing business.
On the flip side, what have been the challenges you faced over 2024?
Well, the whole of the medium and small company area has been difficult. Companies that have marginally disappointed have been very harshly treated by investors, with the share price falling. There's been a lack of retail flow into medium and smaller companies' funds. So we've been increasing, for instance, the AIM exposure. Many AIM stocks have had a very difficult year share price-wise, but sometimes not operationally. Operationally, they can be growing and going well. It's just investors are very sceptical about the area and not going there to invest. That's an opportunity, and we're using that opportunity and refreshing the portfolio by buying stocks and some stocks in that area.
Looking forward then, going into 2025, what do you foresee as being sort of the major trends that will impact the UK market and Law Debenture?
One of the things that will impact Law Debenture is different to other people. It's professional services business. It's growing across the piece, and that's exciting. They're seeing more business coming through the door, and they've been showing high single-digit earnings growth, and that coming through it will help the overall portfolio. On the quoted side, on the quoted share size, we've increased these medium-sized companies. We've been buying some AIM stocks. These are on very low valuations, and they are, some of them, going to be extraordinarily good businesses over time, in our view. So it's a mix of the professional services side coming through with its strong cash and good growing results, and the opportunities that are around in the UK to buy stocks that are on low multiples, but those low multiples aren't justified. They will re-rate over time, we believe.
In the context of your recent award, as well as the fact that the UK is a go-to place for income, I know that it has, in combination of share buybacks and dividends, become one of the highest share price yielding markets in the world. How do you feel that the UK market and Law Debenture will deliver for income investors over 2025 and the outlook for income and dividends over that year?
Law Debenture is yielding around 4%, and it has grown its dividend every year for the last 16 years. And the year it didn't grow, it held its dividend in the financial crisis, and before that it had been growing its dividend. And it's compounded a very good level of dividend growth. So when you start with around 4% and you believe that there's going to be that kind of growth, you've got a really rewarding investment. And it is partly that at around the level it is, it's easier to grow the dividend. We're not stretching to pay the dividend, and that's important. The philosophy is, if you keep growing the pool of capital, you've got sustainable and strong dividend growth, and the UK market, as you say, provides opportunities there. Dividends are part of the culture of many companies. They're often a good discipline for companies, because you remember, a dividend payment is a cash payment. So the company's focused on generating cash, and that means they probably make less mistakes than they would if they weren't thinking about cash. So the mix of growth and dividends makes investing in the UK very worthwhile. Dividend growth in the UK will probably outstrip inflation next year, and Law Debenture has got a growing pot of dividend-paying companies. Companies like Rolls-Royce will be returning to the dividend list. Marks and Sparks will be returning to the dividend list. This means that the earnings ought to grow. At the same time, the professional services business has been coming in with high single-digit earnings growth, and that business is broad and expanding. So the mix of all that would suggest that we will see the continued strong dividend growth that we've seen in the past.
So then, just to summarise, how do you feel that the UK equity income market will look over 2025? And how do you feel that Law Debenture is the best position to capitalise on that for its shareholders?
Well, I think expectations are relatively low, and it's very nice to be investing when expectations are low. So people can just beat those expectations a bit, and you can see share price appreciation. So with a bit of growth, actually companies can come through with surprises on the earnings upside, because they've got their costs under control, and a bit of general sales growth will lead to operating profit margins growing. And that is a good background to see strength in the equity market.